beats the blue away in the fourth quarter. The bank reported strong numbers amid demonetization, a slowdown in credit demand and non-performing asset concerns. Net profit jumped about 18.25% year-on-year, pipping street estimates by a slim margin, and you can see the result on the stock on your screen. As soon as the number was announced, the stock zoomed in trade, ended the day up by about 2.3%. Net interest income rose sharply, while asset quality did not worsen compared to the previous quarter. Let's bring in Ritu Singh with the lowdown of the numbers. Ritu, you were attending that press conference as well. Take us through the key takeaways from the earnings this quarter.
Well, firstly, very understandable the excitement among the investors as far as the HDFC Bank stock is concerned. The performance by all standards was quite outstanding, and it took the street by surprise, especially the kind of loan growth that HDFC Bank reported. You know, when we're talking about industry growth numbers of 5-6%, HDFC Bank reported a 19.4% overall growth, and if you look at it, only the domestic growth, that was over 23%, led of course as usual by retail, but overall a very good set of numbers. The net interest income really surprised on the upside, which grew by over 21% over the previous year, of course led by a strong growth in the balance sheet as well as the loan growth that we talked about. Profits, despite 2,000 crore taxation and a huge spike in provisions, still managed to grow by 18.6%. That was mostly in line with what the street was estimating. Provisions is the big hiccup as far as HDFC Bank's numbers though are concerned. Provisions more than doubled in this quarter from 600 odd crores in the previous year to 1,200 odd crores in this particular quarter. But HDFC Bank did explain that the jump in provisions was primarily on account of a specific loan loss provision for which the bank, the NPAs that it could have been, the loans that could have turned NPAs in the previous quarter were only recognized in this quarter on the back of RBI 60 to 90-day dispensation, which was demonetization related. Other than that, asset quality very stable for the bank, flat in fact, gross NPAs at 1.05% and net NPAs at 0.33%. So good numbers all around, even net interest margins at 4.3%, very healthy, and therefore they got the street really excited.